Hello and a very warm welcome to my new video. Today we're going to examine the stock market and discuss the implications of the war in Iran on the exchange and which specific stocks are impacted and to what extent. We need to clearly differentiate here. There are some stocks, a select few, I'd say, that are benefiting from this environment. We discussed those and naturally a broad mass of stocks that are currently suffering and will continue to suffer, because if you look at the current news situation, it doesn't seem like we'll see any relief here in the near future. Quite the contrary, the problems with the Strait of Hormuz, that oil shipping continues to be restricted there, or that further risks could arise regarding a widespread conflict in the region, these still dominate the discussion on the stock market. All right, let's dive right in. But before we begin, a quick risk disclaimer. Everything I say is not a buy or sell recommendation or financial advice, but simply my own opinion. So let's dive in and see what's actually been happening recently. And I'd like to start with oil, because oil is the primary medium or asset that really shows what's currently going on here. And if we just take a moment to consider the chart of WTI crude oil, specifically in the United States, then we can clearly observe how its price has absolutely skyrocketed. I had somewhat hinted at this, yes, with the protests and so on. The stock market had somewhat priced in these risks, but the full escalation with the military strikes, of course, completely redefined the entire situation, and consequently, the oil price is now moving towards $100. And this sudden surge, of course, also brings with it, or rather, it naturally leads to other risks emerging. Of course, we clearly have the primary risk of war, yes, the disruption of supply chains, etc., in governance, especially regarding oil transport. But then there are the secondary effects, and by that, I mean inflation. This then also makes its way into the stock market. We will also discuss the indices later and why I can already tell you at this point I have somewhat reallocated my portfolio into certain stocks that will now benefit. We'll naturally discuss those right away, and the ones I've sold. And I also want to share with you which stocks might now be at risk of experiencing a significant pullback. So clearly the oil price is rising, and consequently oil stocks are primarily benefiting here. For example, we have Shell. Shell stock naturally also reacted analogously to the oil price. Well, fundamentally, one must, however, view this in relation, because depending on how long-lasting the oil price now remains at a higher level, or how quickly a solution is found and a relaxation then emerges in the market, these oil stocks could then, in the medium term, return to their old initial level here. It naturally primarily depends on how oil production looks in the end, yes, whether we continue to have the oil surplus. Iran, I believe, produces only about 5% of the global oil trade. That means it's not that significant. It can be absorbed. But fundamentally, we actually had the initial scenario that oil, due to overproduction, would essentially remain below $70. And, well, that's, of course, for now, yes, that particular topic is off the table, I would say. We are now operating in completely different regions, and should a truly clear relaxation become apparent, then I believe that we could, in the medium term, potentially drop back to that level, below $70. But it's not there yet. Therefore, one should perhaps still be a little cautious with oil stocks before jumping into them now. Of course, if the oil price rises above $100, then the stocks will continue to rise. But the risk-reward ratio, one always has to decide for oneself. Naturally, this is not investment advice. I am not currently invested in oil stocks. For me, the potential I actually see in oil stocks right now is still relatively low, because they've already performed quite well. But as I said, it's not ruled out that if oil prices rise above $100, I also believe oil stocks could still gain another 20-30%, depending on the specific stock you're looking at. That then 20 to 30% is still possible. Sure, but on the other hand, of course, if we suddenly see a de-escalation, for example, if Iran capitulates or something similar, then the entire situation reverses, and we quickly find ourselves under pressure here with oil stocks. Another sector that benefits very strongly, and that is oil tanker stocks. I've included Frontline here because it's one of the largest providers in the oil tanker ship sector. And then we see the freight rates for oil tankers literally exploding upwards. Accordingly, the stocks have performed very well. And well, if you look at this, like the Iraq war, you'll see how high it can go. This stock could also accordingly still run a very, very long way if freight rates continue to climb. And this is actually a stock I'm keeping an eye on, where I'm still considering investing because it moves counter-cyclically to the market. As long as we have this risk, the stock tends to keep moving upwards, because then also of course, only if freight rates also continue to trend upwards. But fundamentally, I am quite bullish here that we could still see significantly higher prices. How high is always difficult to say. But if we compare this with the Iraq war, then we see these are the kinds of possibilities in which one can now, of course, reallocate their portfolio. I've gone into cash with some of my shares. I've sold some of them and am now gradually shifting into these specific titles. I'm still considering Frontline, though. Well, it is, of course, a very, very volatile stock, but where I haven't relocated my investments, those are precisely the stock exchange operators. And these stock exchange operators tend to run counter-cyclically as well. For example, this is a Nasdaq stock here, but of course there are also all other stock exchange operators. The German stock exchange, for example, is a stock that reacts very, very sensitively to times of crisis. That means it performs very, very well. So it runs contrary to the market, and I have now accordingly actually reallocated a large part of my capital into the Deutsche Börse stock. But you can also reallocate it to such stocks here. There are several of them. We can gladly make another video. Let us know in the comments if you're interested in such counter-cyclical stocks, and please leave a thumbs up. That would make me very happy, and a subscription, of course. Many thanks for that. Okay, so the Nasdaq stock, I think here too the stock will continue to do well, because clearly, why do exchange operators benefit? Volatility, active trading on the stock market, that generates fees for them, and that's why these stocks usually perform in such supposedly bad times, right? When all other stocks are falling, these stocks perform quite well, and that's why you can actually use it a bit as a hedge. And that's what I'm kind of banking on right now, even in difficult times, in volatile periods, to still manage to generate a return, even though the overall market is actually declining. Of course, you can also make money with other methods, with shorting, leverage, and so on. But that's not the subject we're discussing here right now. That's also only something for professionals. But this is one such possibility, how you can act counter-cyclically here. Also counter-cyclical, and that was very clearly observed, are drone stocks, of course. Drone stocks are to be classified within the armament sector, and that is, of course, a sector which has already been performing strongly for several months and now will naturally continue to perform very well. These are, of course, the big players like Lockheed Martin. You can name all the American ones, but also the drone sector is really picking up again. And if we look at Redcat Holdings, which has received very, very significant buying interest, the RSI has cooled down. So it wouldn't surprise me if we see another 100% gain on the stock here at Redcat. So I'm very, very bullish in my overall assessment here, because I'm glad that I'm quite well positioned and still holding the stocks. And accordingly, yeah, I'm quite confident that the stock will continue to perform well. So let's move on to stocks, or the overall market, which is now showing some weakness, and we can see it here very clearly in the weekly chart. We also see here this flattening top, like a ball we throw upwards, which then in the end falls down, and clearly that needs a trigger, and this trigger is now this Iran war. If that hadn't happened, we might have just moved sideways at first, or rather now I actually see the potential for us to head towards 6,500 points on the S&P 500 already next week, I'd even estimate, and then we'll have to see how far, to what extent it escalates, and whether we'll see even lower lows here. Yes. The next significant support would then be around 6,135 points for the S&P 500. It looks similar for the Nasdaq. I actually shorted that a bit too. And I've actually just sold off a portion, or even a significant part, of my tech stocks here, specifically those that are currently valued a little too highly. And we'll see that as a prime example very soon with the next stock I'm going to present today. But also the Nasdaq, if we take a closer look at it, we can observe various support zones. We just closed at 24,600 points. I think the Nasdaq will also settle into lower regions, falling below 24,000 points, possibly even next week, depending on what bad news we might still receive. But for me, it's a clear buying opportunity. I think this whole issue could easily drag on for many months, or even several quarters. Sure, but eventually all the negative aspects will be fully priced in. We'll then see a certain kind of status quo, a stabilization where everything has been accounted for. And that's precisely the moment when one should be fully invested or should indeed re-enter the market. We'll certainly discuss that then, of course, but currently I'm rather on the bearish side. So I've taken some chips off the table here and said, okay, with a well-performing stock, I'll take my profits now. And because this risk-reward ratio, and that's how one always has to approach it, or rather consider it the risk-reward, what speaks in favor of us continuing to rise further here? Relatively little at the moment. What's the downside risk? It's relatively high that we could see a 10-15% drop in the index here in the near future. This could, of course, mean a significantly larger drop for individual stocks, like 10, 20, or 30%, depending on how well those stocks have performed. And what do I mean now by well-performing stocks? And there we must, however, look at the fundamental chart. And we see, for example, with Lam Research, very, very well. Yes, the stock actually performed excellently with the whole data center hype, although the word hype is actually a little bit out of place because it is also fundamentally underpinned. Yes, the growth rates are indeed absurdly high and the companies are truly earning very, very good money. But we're seeing here classically from a technical chart perspective, a double top. And that is indeed something that has now been confirmed, that we have now lost the short-term moving averages. This means we are currently in a downtrend and need to see where it's headed. The 200-day line is worth noting at $150 for Lam Resource, but that's just an example of how many stocks are doing now or will be doing, and what or which stocks are particularly at risk. Those are the stocks that are particularly highly valued. Let's look at the history. If we take a look at Lam Research, specifically at its price to sales ratio, we can see it was at a price to sales ratio of 15. And if we now enter a market that fundamentally has a negative sentiment, then this high valuation becomes a risk for the stock. And we are seeing that this high valuation is then reduced, and that we are indeed reaching valuation levels that are significantly lower. And I think that here at Lam Research, for example, we could easily see another 20% decline in the coming period. And that this kind of drop, I'm simply not willing to endure. So I told myself, okay, then I'll take my profits, or rather limit my losses beforehand and then buy in at a more favorable price. But if the market situation should then turn around faster, which means you must now actively stay on top of things and also follow the news a little, in which direction is it going? Are military activities being expanded, or are they receding? Are negotiations being favored? Then it's more of a sign that we might potentially see a trend reversal here, and that one could get back into stocks, yes, with the price to earnings ratio, it's exactly the same thing analogously. Yes, here too, we will reach more favorable levels if the entire situation escalates further. And accordingly, if one takes a look at the chart, yes, the valuation is easily 20% lower. Yes, then we'll end up here at approximately $160 for the Lam Research share, just as an example of how I essentially proceed and evaluate such stocks. You can do the same thing with any other stock that is currently highly valued. And there are quite a few of those in the tech space, and especially in the AI space, that should currently come under significant pressure. So I sell these kinds of stocks, reallocate the capital so that I can limit my losses and still generate returns in the market. And I do that accordingly with, for example, exchange operators and perhaps also tanker stocks. I will then take a closer look at that in more detail. That's all from my side for now. Please feel free to write in the comments how you view the current situation and how you're acting. That would certainly be of interest to me. And yes, many thanks to all the channel members, of course, and I truly hope that we'll see each other again in one of the upcoming videos. Until then, I wish you all the very best, much success, and ciao.